Welcome to our next quarterly update. It's summertime. I'm casual today. 37 degrees today. It's going to be a hot one. Big northerly wind coming as well. How's Australia doing? Still very, very well. Inflation 1.5%. The growth rate close to 3%, still doing very, very well. We had a surplus in gross domestic product in the December quarter, so Australia's growth rate is doing exceptionally well. All the fundamentals of the Australian economy, all the vital signs, again, doing quite well. From a political perspective, a relatively new government had some problems with the Senate early, but now starting to work the Senate out a little bit. For example, there's been cost-cutting measures, which was called the Omnibus Bill, that was passed by the Senate. Government had to do some deals with some individual senators, but managed to get it through. There's also been a very important industrial relations bill for the building industry that's also been passed. So again, the government's starting to become more effective. They control the House. The Senate looked like it might be problematic, but they're starting now to work out the Senate. We turn now to the world. Well, we have President Trump. Will we all be trumped? I don't know. Has he had a honeymoon? Has he taken his time? No. There's been executive orders really from day one. What sort of executive orders? Well, there's been an immigration freeze on certain countries. There's been the promise to build the wall. And there's also been a Buy American campaign. The American business community is actually very positive about Mr. Trump. So the American markets at the moment are quite strong. Russia's been in the doghouse for quite a while, but Mr. Trump and Mr. Putin are friends. So it's likely that the sanctions that previous administrations have placed against the Russians are likely to be relieved. That unleashes one of the world's strongest economies. Within the top 10 countries of the world, Russia has 11 time zones. It has unlimited raw materials. And it's had very strong sanctions which has stifled its growth. If Russia can also add to the world growth, very good sign. China's growth continues, about 6 to 7%. Australia's growth is about a third of that. Europe's growth is about a quarter of that. So China does still very well. As just mentioned, Europe, the European Union, about 1.7% growth. So good growth all over the world. No issues appearing in Italy, no issues appearing in Spain, no issues appearing in Greece, no issues appearing in Iceland. Global financial crisis type things pretty much behind us. All of the world, including South America and Asia, of course, in strong growth positions. So it's not a bad place to be right now economically. As far as investments are concerned, how we can make a dollar, in our last quarterly update, we spoke about 3 great growth areas. Our focus should still remain on those. What are those? One last time, healthcare, food, and infrastructure. Our primary focus should be on those. But there's also a new shine coming to mining, and some of the mining companies with the increase in iron ore demand has now pushed up BHP and a number of the other miners. So good opportunities. Some new law changes taking place in Australia, which doesn't negate the key role of a self-managed super fund. For our firm, self-managed super funds are a centre of excellence. Has been, always will be. We have over 500 self-managed super funds that we look after on behalf of clients. And although there have been some contribution changes, and although there have been some other changes as far as rules of superannuation and various conditions, it still remains our number one best investment vehicle. One last point, independent advice. Maddern Financial Advisers received an Optus Award for Professional Firm of the Year, and our focus is still very much on being a strong, independently owned and independent in every sense of the word business. If we can ever help you with any of these things that I raise in these quarterly updates, please feel free to give us a call. Thank you, and we'll see you in the next quarterly update.